Okay, last chance. If this one doesn't work, I'm going to bail on this and just do a recording. I hope we're live and you guys can hear me and see me. Looks like we are, so good afternoon. It's Wednesday, the 20th of April, 2011. Sorry for the audio difficulties there, but looks like we got it good now. So let's get started here. The S&P 500, obviously the whole market had a very positive day based on some earnings, and we'd seen a slight recovery yesterday afternoon, and it was what I was calling, turning a little bit more neutral. If you looked at alpha trends, I was talking about the last couple days how this prior support became resistance in here, and then we got up to this next level of support, which appeared to be holding as resistance yesterday initially, but then we were talking about the 131 level. If it could get back above there, it would turn more neutral where that 5-day moving average is, and I don't know if that means we're not good. John, please let me know specifically what we're talking about here, if we're good or not. But anyways, I'm going to assume we're still good here. The S&P 500 is just short of this bigger level, up near about that 134 level. And 134 had been, these highs right over here, 134 even, have been the bigger, more important level. And I think that if this market can kind of hold at least above this 132.50, 132.30 level here in the next couple days, then we're probably going to make an assault on that 134 level, and from there it just it seems like new highs would be inevitable. And the weekly chart, of course, is still in a bullish uptrend. We've been talking about that. Okay, so everything is good. Thank you, Positive Psych. Looks like we are back on track. So anyways, let's, today's action, obviously, we had the big gap higher. And interestingly, a lot of that actually occurred in the pre-market here. Well, here's 2 days worth. So this was the close yesterday at 4 p.m. Eastern. And we had kind of a grind higher throughout the night. That picked up steam a little bit right before the 9:30 open, and then from there it just kind of went sideways in the futures. But anyways, we go back to the SPY for a moment. We can see that it was a pretty quiet session as far as the S&P 500 goes, but we did hold above the volume weighted average price for the day. So that tells us that as much as this market was up, the buyers did maintain control of the session at the close here. The average buyer was on balance up, and the average short was basically losing money. And we're in a bull market. It's I look at this thing every day and think I'm just glad that it doesn't come naturally to me to sell short. I've been talking about to subscribers the last few days that the market has kind of been strange, that we've had all these big stocks that have been leading higher, and actually not all the big stocks have been leading higher. Google, of course, had a tough day. Interestingly enough, Google was up $4.20 today, and if you're familiar with what if you live in Colorado, there's a lot of people here that think that 420 is a national holiday, but that's a whole different subject. But anyways, Google closed up $4.20, but obviously this stock broke some very important support on those earnings and has remained under pressure. But the point was that there's been a lot of leading stocks that have been acting very well. Mercado Libre, we had CMG, who's reporting earnings right now, I think, and let's see where that is. But they were up $8 here today to all-time highs, trading down at 283 right now, so not a bad deal. And of course we have Apple reporting earnings, and this stock is it doesn't look like they're out yet based on the reaction to the stock, at least. So anyways, Apple was a good example here a couple days ago, and I had said on this day right here, now I don't really trade Apple, but I was telling subscribers it looks like they trapped shorts beneath an obvious break of support, and we always want to ask the question, where has it come from? Where does it have the potential to go before we take a position? In other words, you don't want to sell short Google or Apple rather after it's had a 25-point drop and then breaks that support. We were also talking about another break of support in AEM and how that new low brought about kind of foolish money to the short side, I think. And, they got squeezed. We had seen QPSA yesterday, same thing, breakdown, and then BKS. So these stocks that break down to these new all-time lows aren't always, the obvious shorts that they look like, and not just the, all-time lows, of course, but when you take a look at a stock like Apple, breaking an important level of support, you have to look at it and remember that the most important thing always is okay, maybe you short that break of support, but then what happens? If you look 3 days ago, when it crossed above the volume weighted average price, which was at the volume weighted average price for that point that day. At this point, the sellers the buyers took back control for that day, despite the market being down on the session at that point. Obviously, it continued higher from there, but the point is, this market has kind of been acting a little bit strange in that the indices have really been neutral. And I look at that really, when you look at the weekly time frame, you have to look at that as a bullish thing, because the primary trend on the weekly time frame is still higher. And what we're seeing here is more of a consolidation through time. And now we've got this inverted head and shoulders pattern that we started anticipating, really starting to look like a real thing here for the SPY and for the NASDAQ. We'd spoken about it in here as well, this inverted head and shoulders pattern. It kind of dipped a little bit lower than I would have thought it would have, but the $58 level, basically $58.25, that's kind of similar to 134 on the S&P 500. So the primary trend on the weekly time frames are still higher, and I got someone asking me if there's problems. I'm not having problems. I don't know if we're still experiencing technical issues, but I'm looking at it as though everything's still going fine until I hear otherwise. But the NASDAQ is, what do we see here? We saw a deep pullback. Now we see what's looking like a very important higher low that was actually made this week. Kevin, thank you. So we're loud and clear. If there's technical issues, it's on your end, and if you're not hearing me, then you can't hear me anyway, so it doesn't matter. But the NASDAQ is still in a nice weekly uptrend, as I was pointing out. The 30-minute time frame, what we had seen here was that this prior support was broken and held yesterday. We got back above the 5-day moving average in this little level here and blasted past that 56.50 level. And a lot of times you look at a market like this and you say, what we've been really kind of focusing on in for subscribers to Alpha Trends is that the market seemed as though it was possibly vulnerable here this week. And I was saying that we have to sometimes just stand back and not focus so much on the market itself, that we get obsessed with the S&P 500 or we get obsessed with the NASDAQ movements. But really, if you stay focused on risk management, on being in the right stocks at the right time, not taking big bets and irresponsible bets in front of earnings, then you trade each stock based on its own merits, and there's still going to be good opportunities in the market that present themselves, that you don't have to be obsessed with the, where's the S&P 500. And I was explaining to people this morning that, the S&P 500, obviously, the markets typically, what is it? They say 70% of a stock's movement is based on where the overall market is going, the trend of the market. But if you look at it, that's 70%. It leaves 30% where it's not trending with the market. And if you, again, just have good money management skills, reasonable share size, you can still exploit good opportunities day in and day out. My good friend G-Man over at SMB today ripped it up with SIFY, and clearly you look at SIFY, it's in this major uptrend, but he made a lot of money shorting this stock, and rightfully so. On that 1 minute time frame, you can see it was in a downtrend. So the point is, it's not one dimensional, and you have to choose what is your preferred time frame and and where do you perceive the opportunities? It's a personal thing, which is why people say, hey, what do you think about this stock? Well, it's tough to say. What's your perspective? Are you a day trader? Are you a swing trader? You're trying to position it for a month or so. When are earnings due? How does this relate to your account balance? How much time do you have? Are we in the middle of earnings season? If the S&P 500 and the Qs are showing weakness, then we want to look at that more as a reason to maybe trade lower share size than we normally would. And what do you give up there? You give up opportunity cost. But when you give up opportunity cost in the market, what you're also doing is preserving your assets for another day, so that if instead the market gapped lower, you're still able to come back and have cash to be able to deploy and make the low risk opportunities. So, I found today, for some reason I was involved in the right stocks. I was also, short some of that SIFY and did well with MCP, but you have to just, I've found that, and I'm kind of going off on a tangent here, but I've found that really my results in the market are highly uncorrelated to what the market does. That it's really, and this is nothing groundbreaking here, but it's a mental game. And I've said that in the past, one of the biggest factors to my performance is sleep, and how much sleep I get, and the quality of that sleep, and whether I'm mentally on focus. It's not necessarily sleep, but that's but being well rested gives me the ability to be mentally on focus and be able to take advantage and not let your emotions get to you and say, come in and say, oh shit, the market's gapping up, I'm missing out, I'm here on the sidelines in cash, and everyone else is making money except for me. And first thing in the morning, maybe that's the case, that everyone's making money except you. But now we've got to look at it and say, how did you handle the market from 10 o'clock to 3:30? Let the market settle in a little bit, and how do you handle what's in between? People tweet to me, hey, the high for today, at 10 o'clock, they're going to say the market peaked at this point. That's the high for the day. Who cares? That's not really relevant. How do you trade? What's in between is what's relevant, and finding the right opportunities and managing risk. So I have gone on more of a tangent and not quite as focused on it as I had hoped to there. But the Russell 2000 still in an uptrend, obviously, as well. This is just a pullback within an uptrend, and we can say that definitively now that the buyers have control. We're back above the 5-day moving average until they lose control. And obviously today's lows are going to be important, and this prior area in about 82.75 are going to be important as well. So if we take a look in here, what we've been kind of observing in the in this is the 50-day moving average did hold as support after a couple days test in there. And the other thing that we were looking at last week was the and I don't know if I have enough days here, so let's go to a 65-minute time frame. Is the the 50% retracement, and then you take a look at the volume weighted average price from these lows. The buyers, have really taken back control of this market, and so now we want to see that today's lows hold, and then down towards 82.50. If that can happen, then you look at this daily time frame, we're still in an uptrend, and we came off these all-time highs recently, and it looks like they should be able to go back and test them. Maybe Apple's going to report something, and Apple's going to be down 50 points and take the rest of the market with it, but so far that's not the case, and we can go based on, if you think that's going to happen, well, then you should be trading small share size, or cautiously short, but don't get sucked into trying to pick the top. I actually let's talk about the semiconductors first, because this is pretty important here. This 35 35 level had been this bigger support earlier in the year, which found resistance, right at that 50-day moving average as well. So 35 to 34.90 is the level we want to see hold in the semiconductors in the SMH. This is the second time that this group has been rescued here by big news. First, we had the AMD, or I'm sorry, the who was it? How could I have forgotten already? Anyway, the takeover in that group. It doesn't matter which one it was. But the point is, the buyers are back in control here, and it's been a sideways correction a little bit through price first and then through time, and the buyers have reestablished control. You have to look at this as just bullish price action. Financials, I know a lot of people look at the financials as, the market can't rally without the financials, but this level in here where we're testing right now seems like an obvious level of support, and it seems so obvious that it might be similar to Apple's obvious support break right over here a couple days ago, that all these people are concerned about the financials, but maybe it's going to suck the shorts back into there. The big news in there was J.P. Morgan and their earnings last week when they they gapped up that day and then got crushed. But that brought the XLF up to that declining 5-day moving average. And the sellers are still in control of the financials, maybe beginning to get a little bit more neutral here on the intermediate term. But the daily time frame, we're at an important support level. If it cracks below 1580 and holds below that level for more than a half hour or so, then I think it's important to look at it and see that there's the possibility that it continues lower. But and that's similar to what I said on the Russell earlier in the week. That is, if it cracks below this low here of 81.60 from last week and holds below it for more than a half hour, then there could be issues. Well, it broke below that 81.60 level, but it didn't hold below it for more than a half hour, and that's where the buyers came back into the Russell. Anyways, let's go back and take a look at everyone's. It seems like a lot of people are trying to pick the top in silver, and I got sucked into that game today, and fortunately was disciplined about it. But the silver is just in this massive uptrend, and you look at silver and you say, "Wow, this thing is just too. It's up too much. It can't sustain itself. Whatever." It's been up these big 5 days in a row, and it does seem extended. It broke briefly below the volume weighted average price in here today, so I had bought some ZSL right in here and got stopped out right in there. I was thinking, well, it's a good risk reward. It was clearly not a trend trade, but even if you're going to go into something like this where you're going to try to pick that top, don't stubbornly hold on. Instead, trade it. It's the market's telling you, no, it's not quite time yet. Maybe there'll be the opportunity to make a nice, you see SL, the physical silver maybe drop down to $42, 41 or so, and that'll be good for the ZSL. But ZSL is really just a loser's game. So far there's no other way to look at it. It's one of these inverse leveraged ETFs that's very similar to they'll probably do a 1-for-3 reverse split the way they do every few months, it seems, in the FAS and the FAZ. But anyways, I'm on a tangent once again. I apologize. Let's take a look at the stocks. Last week when I was on, we were talking about the strength, or I'm sorry, the support in Apple. Obviously, that stock has firmed up nicely here. CMG still, at these all-time highs today. It's down at 281 right now, but still clearly in a big uptrend. DEC breaking out to all-time highs. We spoke about it over in here. EXAS was a little biotech that we had spoken about, and this one had a nice little run. We had gotten stopped out of it right in here at 745, but if you have more patience, it still looks like it's got some room to run. MELI, real nice breakout in there that we had participated in right as it started to break too, and no reason to think that cannot continue to move higher. Priceline was another one that's just in this monster uptrend and continues to move higher. PPDI was a biotech that still looks like it's got a great looking weekly chart. The daily time frame still kind of consolidating here. It looked like it wanted to get going higher last week, but it never broke that higher high of 3150 in here on the intermediate term. I was looking at it to buy in there. It didn't happen. It gapped down in here, so I still think this one needs time to heal, and probably 3150-ish is the level that one will be able to move above. We spoke about our REDF, which has been a monster, starting to pull back here a little bit. So, I'm not long this anymore, but if you look at the bigger move of the last 2 days, we did break below that volume weighted average price. So I don't think that short-term traders should still be involved in that one to the long side. SMOD still kind of setting up in here. We look at the 10-minute time frame. This is the bigger level, 835, 840, that's going to need to be broken. I would say, keep that one on your watch list. VRTX is another biotech. We had spoken about this triangle developing in here, and today it ran up, and it did get back above that volume weighted average price, but nothing really special occurred in here. I think this is a good one to keep an eye on tomorrow. Maybe for short-term traders above 48.10, you could buy it with a stop down near about 47.60-ish, and that could lead to the bigger break on the daily time frame. You can see that it is holding up well in the weekly and monthly charts. It broke in this resistance that has been in place for the last 5 years. You could also call that an inverted head and shoulders pattern as well. But anyways, Vertex is a good one to keep an eye on. I also think that AEO is a potential one. A lot of retail stocks have been strong, but for some reason American Eagle hasn't caught up to them yet. It made a little bit of progress in here today. We've got all these rising moving averages. The weekly chart looks like it gets above this level. You probably got a couple points in it. But the 30-minute time frame, you can see it gapped up today and ran, and then it pulled back. It's built below that volume weighted average price, so I think maybe 1620 is where the buyers could regain control of AEO with a stop down near about 16 bucks. Some of the other stocks I have an eye on include CHSI. This is up at all-time highs here. CLNE looks like if it can get back above the highs from last week, it should be able to make some upward movement, and that's basically right in here at about $16.90 a share. Someone asked me earlier about SYMX, and SYMX, a lot of people have been, to me, I know it's clean coal and that sort of thing. It's got a great story. I haven't traded it here the last couple of days. It just seems too extended for my taste, and today it got a deeper pullback, so it hasn't been my type of stock to trade. I know people have done very well with it on the long side, but it came back pretty darn hard in here today, and if you take a look at the volume weighted average price of the last 3 days, we did close below that. So I think that this one's going to need to correct, most likely through price. Perhaps it holds on and corrects through time like it has the last, after the last few runs. But it seems as though, that big volume that it came off on today, it's probably going to see a little bit further pullback price-wise. What else? I saw somebody. Let's take a look at LUV. And airlines, I don't like to trade personally, but anyway, Southwest. You look at the weekly chart, we're below a declining 10, 20, 30, 40. We're below the 10, 20, 30, 40 week moving average. We're hanging on what looks like has been support here at 1150, and if that breaks, then I think you're probably going to drop $1. Realistically, I don't think it's a good short candidate. I think it looks really probably more neutral, but it is getting down towards the low end of that range. If it was to break that 1150 level, then I think it would make a better short than long. But it doesn't look like there's really any compelling reason to really be long or short. And I'm kind of biased, I guess, towards airlines as well. So how about Crocs for about a 44? You look at the weekly chart, Crocs is making a nice comeback over the last 2 years, and closed up here at at the highs today. So it's it's broken some resistance on Tuesday. It followed through nicely here today, and it's. Do you want to buy it after a couple days run, or do you want to wait for a pullback that settles in? I wouldn't personally be chasing the stock. It looks bullish. I'd say if you were involved in it, a stop below today's low would make sense. Before purchasing it, I think maybe it would make a slightly higher low, so a little pullback, and then it rallies from there and put a stop underneath that next higher low would make sense. But there's still a lot of good opportunities in this market, and if you stay focused on the individual stock setups and try, and don't get too heavily involved position wise, especially because we are in the middle of earnings season. It could go big in either direction, and it looks like we're getting some activity in Apple here. So let's take a look at that real quick. It closed regular session at 42.40, and we're up at we're the initial knee-jerk reaction is higher, and that's going to be positive for the market if it can hold on to these gains. Obviously, a lot can happen between now and 9:30 a.m. tomorrow, but so far we've got it basically, let's just call it $350 a share. So we're up towards, let's see what happens at this 352, 353 area, but it's moving nicely higher. So looks like it should be positive for the market overall tomorrow. Let's see what happens on the open. Thanks for tuning in. I won't be here on Friday. It will be a holiday, and hope everyone enjoys their long weekend, and I will talk to you then next Wednesday. Thanks for tuning in.